Price action. Probably one of the most important aspects of trading with analysis. It can predict whether the price will jump or fall, gain momentum or lose momentum. If you don't understand price action, chances are you won't be a successful trader. Let me tell you why. Most indicators, even the popular ones like moving averages, MACD, RSI, stochastics, all are lagging indicators. What I mean by that is that they use previous price as an input. So sure, it might give you a signal to go in, but most of the time the chart has already started going up or down before that indicator gives the entry signal. This is the exact reason why price action is such a powerful tool to understand, because it can help you make decisions in real time, in the moment trading. Now, I'm definitely not saying to indicators. Indicators can 100% help you make unbiased decisions when trading, especially when paired with price action. But what I am saying is if you want to become a successful trader, you definitely need to understand price action. That way you can take trades that you are confident in. That's exactly what I'm going to show you in this video. 4 price action secrets that'll help you trade more successfully and make you a better trader. Let's get straight to it. The first price action secret I'm going to show you has to deal with the candlestick. Most people, when they look at the candlestick, mainly focus on the wicks. While the wicks can be an important part when reading the candlestick, the body itself can tell just as an important story. Let me show you how. Take a look at this candle. Its characteristics are very specific. It's a large green candle without any wicks. Whenever this candle is formed, it means buyers found this specific price so attractive that they started buying in huge quantities. The buying pressure was so high that the price started going up, and the selling pressure was so sellers couldn't fight off the buyers. This is exactly why this specific candle had such a strong close. Whenever you see a green candle like this, it's a bullish sign and also is a great mark for a support or resistance level. One of the most important lessons in trading is that the past can predict the future, and that's exactly what happens here. We saw a green candle with a big body and no wicks. So we set a support level right here because at this level, buyers really like this price. And look what happens. We set a support level because saw a big green candle with no wicks. The price moves sideways for a bit, then reaches this level again. Once it does, it bounces off because buyers really like this price. Then there's no turning back. The price skyrockets. The second secret I want to show you is something called mean reversion. Mean reversion is just a simple way of saying the price will always return to the average. Let me show you an example. Here we see a bunch of price movement. But if we add a 50-day moving average, we can see a trend. Whenever the price dips way below the moving average, it ends up returning upwards back to the average. Same thing happens when the price goes too high. You can see here multiple times the price goes too high and it has a pullback to the average. This is a very important tool to keep in the back of your head. If the price makes a big movement away from the moving average, chances are it will return back to that line. As an example here, the price away from the moving average, this would be a good time to buy because reversion is a thing and the price will likely return back to the average, which it does. The next price action secret I want to tell you has to do with momentum. Momentum is a huge part of trading and it can give you clues if the chart is about to be bullish or bearish. Momentum is the rate at which the price moves. So we can predict the price is going to go up if the chart is gaining momentum. So here you can see the chart is going up, but it's very gradual and it's doing it pretty slowly. Then it has a slight pullback and the chart makes a sharp upward movement. So this chart in itself, here we can see the price movement upwards is a lot more gradual than this one. This means a lot more buyers are entering the market and gaining strength, which means the chart is gaining momentum. And you know what happens? The price makes a slight downwards pullback and does a huge jump upwards. Momentum plays a huge role in trading, and it's definitely an important tool to understand to make you a better trader. The fourth and final secret I'm going to share with you has to deal with pullbacks, and it's a very powerful concept to understand. Let me show you an
Guys, like the
example. When a
video,
chart moves up
like
or
the live,
down,
like
it
the
does
live.
not move in a straight line. It has pullbacks. Pullbacks are these price corrections right here, which give this chart that jaggedy look. Pullbacks are a sign that traders are taking profit. Hence, the size of the pullback can give a bunch of information on what's going to happen next with the chart. If the chart is in an uptrend and there's a weak downward pullback, that means less traders are exiting their trades, which usually means a strong upward movement will happen next. If there is a strong pullback, meaning more traders are exiting their trades, odds are the price will start moving sideways, or even worse, move in the opposite direction you want it to. Now, you might be asking yourself, how do I know a specific pullback is weak or strong? Well, let me show you. To do this, we're going to be using the Fibonacci retracement tool. This will help us realize if a or weak. To use the Fibonacci retracement tool, simply go to TradingView or whatever chart platform you use, go to the side here and click this top one. Now, when you first select the Fibonacci, it's going to have a bunch of different levels, which all these levels are a little much and can really clutter your chart. So we're going to keep it simple and delete some levels so it can be a bit easier to read and understand. To do this, just place the Fibonacci anywhere on the chart, click it, and then go up here to the settings. You're going to want to uncheck all the levels besides these: 0, 0.382, 0.5, 0.618, and 1. This will give us less values to work with and overall make it a lot easier to read. So how we're going to decide if a pullback is strong or weak is by these lines. Let me show you an example. So first thing we want to do is put our lower line on the lowest low and then drag the upper line to the highest high. We're going to be looking for a long trade. We will consider a pullback weak if the price dips above the 0.382 level. If the price dips below the 0.382 level, it's a strong pullback. So like we were saying before, the better. As you can see in this example here, we set our lines to the low and to the high, and we can see the price rise, but then had a pullback only to the 0.618 line, which, as we discussed earlier, is a weak pullback. This is a very bullish sign. We enter the trade here, the price continues to go upwards after. Let me show you an example of a strong pullback. So as you can see here, we set our points to the highest high and the lowest low. Then we can see the price moves upwards, then has a pullback under the 0.382 line, which we consider a strong pullback. We can predict that after the price has a strong pullback, it'll start to move sideways or reverse in the opposite direction. And just as we predicted, the price starts to fall hard. Now, it's very important to note that any of these price action secrets by themselves won't have a high win rate. But when combined together or even paired with some other indicators, it can be extremely powerful. I just showed you 4 different price action secrets. All I ask in return is if you take 2 seconds out of your day and like this video. If you need a powerful strategy to pair the price action secrets with, check out this video because I go super in depth in one of my favorite strategies to use. Thanks for watching, and I'll see you guys next time. Breakout strategies. Setting a support line, then a resistance line for that one moment to happen. When the price suddenly breaks through. And when it breaks through, it really breaks through. But how do you trade this strategy successfully? Is there even a strategy? Are there any secrets? Well, yes, there's a couple. And lucky for you, I'm about to share them in this video. Let's not waste any time. Let's get straight to it. Has this ever happened to you? You set your support line, you set your resistance line, and wait for a breakout to happen. Once you see that the price suddenly breaks through your resistance, you enter a trade extremely excited because you're prepared for a huge jump in price. You get your popcorn, sit down, stare at your monitor, but then suddenly the price reverses and dips. You stare at your screen confused on what just happened, and your portfolio just tanked. Well, I'm going to teach you a secret so this never happens to you again. So the first question we need to ask ourselves is, what is a breakout? Well, a breakout is when you have a support and resistance where there are multiple key rejections for both. The actual breakout happens when the price bursts through one of those key levels. And notice what happens. When the price does break through, it starts soaring, making in this point right here a great entry point. But the question is, how do we find setups like this, where the market could potentially have a breakout? The answer is breakout pattern. I'm sure you've all seen these before, but there are multiple key breakout patterns you should have in the back of your head when trading. There's the flag, wedge, pennant, triangle, rectangle. Now, the problem I see a lot of people doing is they are looking for the exact price action that is in the pattern image. The price will rarely mimic the exact pattern, if ever. So you're not exactly looking for the exact price action that happens in the image, you're looking for the key support and resistance levels that make that pattern. Now, to be honest, it doesn't matter which pattern you get. Hell, you don't even have to memorize patterns. The key thing you have to take away from this is that all these patterns have something in common. The price consolidates, making two key levels, then eventually breaks out. So here we found price movement that looks as if it has multiple key points of support and resistance. The more key points, the better. We acknowledge this happening, so we put a support and resistance line, making a flag pattern. So far, so good. But this is the point where people usually make the mistake. So what happens is people usually wait for a breakout in either direction. So once someone sees the price through their resistance line, they immediately
Like the
enter the
video, guys.
trade
Like
right
the video.
here. But it turns out it was a
Like the
false
stream. Like
breakout
the
and the
stream.
price reverses
Give a
in the
like. Give
opposite
a like.
direction. Would have lost a pretty decent amount of money. I'm going to show you how to prevent this from happening so we go in with a greater chance of the price going the direction we want it to. The first thing we need to understand is what's called momentum candles. Momentum in many forms, but usually it's one big candle with a large body, or three medium-sized candles all going in the same direction. These two forms momentum candles are going to be what we are looking for. Let me show you an example. So in this example, we have a set of multiple higher highs. So we set a resistance level here because the price reversed multiple times at this level. Now we wait. We see a pretty decent sized candle form, and then it breaks the resistance level. This matches our definition for a momentum candle. The problem is only the tip of it broke out, so we are not counting this as a momentum candle. For us to be able to count this as a momentum candle, the majority of the body would have had to been crossing the resistance level. We would also consider this a momentum candle if a candle appears outside of the line like this. But unfortunately, it was a red candle instead, so we ignored the signal. Let me show you another example. So here we have our support and resistance level set up. The price moves and a decent sized candle breaks through our resistance. It's not a momentum candle because it does not have a body, so we wait for further confirmation. Second candle appears, but it's still a pretty small candle. And as we said before, we will only count it as a momentum candle if it has a huge body or there are three green candles. So we wait again. Then a third green candle pops up. This is an extremely bullish sign. So this is where we enter the trade. Now, there are three different scenarios that could happen. The price keeps going up from here, the price goes back down to the resistance level and bounces off, or the price breaks through the resistance level and falls back down and counts this as a false breakout. So what should we do? Should we wait for a pullback to happen, or should we enter the trade right now? Well, what I like to do is set up a strategy. So the odds are always in my favor no matter what the of this momentum. I will set my stop loss right below the resistance level. This way, if the price does end up going down and doing a pullback and bouncing off the resistance level, it does not reach my stop loss, and I still make profit. Or if the price decides to go straight up from here, I'm in the trade. Considering this candle right here is a momentum candle, it's a very low chance that it'll be a false breakout. But in the off chance it were, I still have a stop loss in case the price decided to drop. Now that we have our entry point, we need to figure out an exit strategy. With breakouts, they tend to have large upsides. So if we decided to do just a normal 1.5 ratio, we would be missing out on a ton of profit. To make sure we are taking advantage of huge profits, we're going to be using what I like to call the two-step take profit system. This is how it works. First, you find your entry signal, then put the stop loss below the resistance line. Then we're going to set our take profit line at a 1.5 ratio. Once the price hits our take profit mark, we sell half of our shares to guarantee that part of the profit. The other half will stay in the game for more gains. Next, we'll raise stop loss to our previous take profit mark. Then our next take profit mark will be declared by an indicator. That indicator is the chandelier indicator. To add this indicator, just go to Trading View, go to the Indicators tab, and type in chandelier stop. Then go to the indicator settings and change the ATR multiplier to 2. This indicator will give us our exit strategy. It's very simple. We sold half of our shares at the 1.5 profit mark. We let the other half run. We set our new stop loss at our old take profit mark, and we will exit the trade once the chandelier indicator changes colors. So right here we would have sold the remaining of our position as the chandelier indicator changed colors. Notice all the extra profit we made by only selling half of our shares. If we would have sold all of our shares at the 1.5 profit, would have missed out on a ton of upside. Let's see one more example. We find some key points that are great levels to make a support and resistance. Once we set our trend lines, we wait for a momentum candle to break through our resistance. One candle breaks the line, but it does not have a big enough body to be considered a momentum candle. So we wait for 2 more green candles. Once we see the 3rd green candle, we enter the trade. Stop loss below the resistance line and set our take profit 1.5 ratio. We then wait for the price to hit our take profit, then we sell half of our shares. After we sold half of our shares, we move our stop loss to our old take. Then we turn on the chandelier indicator. We then wait to sell the other half of our shares until the chandelier indicator turns colors. Once it does, we exit the trade. I just showed you some secrets to make your breakout trading game that better. All I ask in return is if you take 2 seconds out of your day and like this video. If you want to see part 2 of this video and make this strategy even more profitable, check out this video. And thanks for watching, and I'll see you guys next time. Here's a recent trade I just finished. A huge 10% gain and massive profit, helping out my portfolio so much. How did I know this chart was about to go up? Of this candlestick pattern right here. And in this video, I'm going to share my favorite candlestick patterns, just like this one, that I use on a daily basis. You can read and understand chart patterns, predict chart direction, become a more successful trader, and make plays this one. Let's get straight